Good day. Welcome to Trinidad and Tobago Chamber of Industry and Commerce's Business Insight Series. And today we are doing an installment in partnership with our sponsor, JMMB, on real estate investment deriving lucrative cash flows. My name is Abigail Johnson. I'm a research assistant here at the Chamber, and I'd like to introduce you to my panel today. On my far left, we have Mr. Andrew Chang, who is a senior trader at JMMB. Then we have in the middle, Mr. Daniel Nualo, who is a property valuer at G.A. Farrell and Associates Limited. And lastly, to my immediate left, we have Mr. Tariq Hossain, who is a real estate developer at Home Solutions Limited. So, to start the discussion today, I'd like to pose this question to all of my panel members, starting with Andrew, starting with the question being, is there still value in real estate investment in Trinidad and Tobago? And if so, where should investors look?
Well, Abigail, I think there's definitely value in investing in real estate in Trinidad and Tobago. We have seen in the past where, from the investment standpoint, where over the long term, investing in real estate provides real value for investors for the main reasons that it generates cash flows, it acts as a hedge against depreciation or devaluation of the dollar, depending on the currency, as well as the long-term value that it generates for both the investor as well as for the homeowner. So it's a great way of and it should be included in every investment portfolio as it adds diversification against other asset classes that may be in the portfolio. So it's definitely should be considered. It definitely has value, and I believe there would be value in terms of the particular segment. There is value in the lower end of the market and lower to middle of the market.
All right, thank you. I'd also like to pose this question to Daniel. From a real estate property valuer's perspective, at this time, do you think Trinidad and Tobago's real estate investment market is still a place to go, a lucrative place to go?
I think in any market, there's always opportunity in real estate. And even now, in the depressed market that we are experiencing, it may actually even be a better time from the perspective that there's a saying that goes, when people are afraid to buy, and when everybody's buying, be afraid. So now is a time where there are a lot of investors that are sort of unsure about the market, and now might be the time to find some real opportunities.
Okay. And Mr. Tariq, from a real estate developer's perspective, do you think there's value in real estate investment in Trinidad and Tobago at this time?
Abigail, definitely. We have huge database of people wanting homes.
Yes.
And unfortunately, there's not the supply of homes. Therein lies an opportunity where there's a huge demand for rental properties until people can get onto the property ladder. So to answer your question, yes, huge investment potential. There's a huge demand for rental property because house prices are still possibly perceived to be out of the reach for the lower to middle income bracket.
Okay. And to follow up with that question, because I know a couple of you guys have talked about the fact that the market is depressed at this time, do you think as an investor that you should continue to watch the market, or do you think that the longer you wait, you may have to see the market upturn? What do you guys think? I'll start with Daniel, actually.
Well, from my perspective, the time to buy is always 5 years ago. So, I mean, with the so-called depression now, it again is an opportunity, particularly if you're looking to buy to live in. It might be a time to find something at a reduced price, and now might be the time. As opposed to when you're buying in a booming market, is always a risk because you're always buying at the top, because the market is constantly going upwards. But now might be the time if you're buying to live. Now I think would be good for that. But however, the converse might be true for commercial, in that if you're buying to rent, let's say commercial properties, because of the amount of office space now available for rent and the reduced price of rentals now I would be conservative in investing in that sort of property.
All right, and Tariq, I know you're looking at it from a developer perspective.
Sure.
So for someone who's trying to invest largely, you know, is the fear that, as you said, rental properties are dipping, is that something that they need to take into consideration, and what kind of market they should look to invest in, given that?
That's right, Abigail.
Yeah.
I mean, when you look at property as an investment, you make money both two ways. Firstly, with the capital appreciation, when you sell and dispose of the property, but more in particular, you have constant rental income coming in on a monthly basis.
Yes.
As Andrew alluded, the high-end market, there is some properties lying idle. So therein lies a challenge. And those investors, the high-worth investors who are holding some of those properties, some of them may not be able to hold on for too long.
Yeah.
And therein lies some opportunities for homeowners who wanted that level of finish with gated communities and whatnot.
Yeah.
Where the opportunities are now is the lower to middle income. And I could give you some examples. When you look at the rate of return of your rent as opposed to your sale, we are still achieving between 5 and 6% return, which to my mind is still fairly positive.
Yeah.
Okay, so I'll give you an example. We completed a project up in Chaguanas. So it's not, you know, sort of an area down in the west, and those properties sold for circa $2.2 million. And they're achieving a monthly rental value of $10,500.
Wow.
So when you look at the return on investment, that is in excess of 5%. You know, we had a development down in Diego Martin. The first phase sold for $1.4 million. Those rents are still today averaging $7,500.
Wow.
When you look
Okay.
at the return on investment there, you are upwards of 6.4%.
Okay, wow.
The phase 2 of that development, which occurred 2 years after, those properties had a capital appreciation of 30%. The rents are still around $7,500 average, which is giving a yield of 5% because those units sold for $1.6 million.
Yeah.
So I think the opportunity for the investment on rental property, or buy-to-let as we call in the market, is more to the lower to middle income.
Okay.
You know, and I dare say that the properties around the west, some of them are remaining idle.
Okay.
You with me?
All right. So we're looking at investments, and you're talking about the percentage and return on investment. So now I'd like to turn to Andrew to tell us a little bit about how to balance your portfolio when you're doing investment to ensure that you're having a mixture of liquid and the more, well, housing, which is the opposite of liquid assets. So
Okay.
can you tell us a little bit about that?
Sure. As you said, real estate tends to be liquid, given that, and that's mainly due to the high price of the asset in terms of the initial outlay. In order to balance that, you would need to have a portfolio distributed across different asset classes, mainly cash, short-term investments, stocks, bonds, and mutual funds, to give you the liquidity in the event that an opportunity arises, that you can capitalize on some of the opportunities that Tarek just alluded to in the marketplace. Constructing a portfolio, you take into consideration the investor's time or time period which they wish to invest, their risk appetite, as well as their target return.
Okay.
Factoring all those criteria taking those criteria into consideration, from there we'll develop a strategy in terms of developing a portfolio for the client to meet his or her objectives.
Okay. All right. And I guess, Daniel, I'd like to ask you now, so when we're investing in real estate, you're doing property valuation. Would you like to tell us what are some of the hidden costs that are involved in investing in real estate?
Of the hidden costs, well, the major cost I would say are your closing costs when you're buying. They're the legal fees, the stamp duty fees. Stamp duty is something that a lot of people don't hear about until the attorneys tell them. So you have your attorney fees, yes, but stamp duty is something you need to pay attention to. When investing, a lot of inexperienced investors don't pay attention to the possibility of voids in your with your tenancies. So you buy a property, so you just think, well, I have expenses, monthly expenses of $5,000 a month. If I get a rent of $6,000, I make $1,000. However, you lose a tenant, that is immediately, so if you thought you were making $12,000 a year, let's say you're making $1,000 a month, you lose a tenant for 1 month, you're now down to 6. And if you're paying an agent to find you a tenant, you now lost another 6. So you actually, just from that one tenant loss, and that's provided you get a tenant immediately, you're actually looking at you're netting 0 in this particular example.
Yeah.
So I mean, looking at paying attention to voids and repairs is something that you really need to pay attention to, because, and even taking into account the long-term repairs, like the roof. You might think, okay, you're making $500 a month, but you need to be putting aside money because maybe in 20 years you're going to have to change your roof. So that's something that I think that a lot of people don't pay attention to.
Okay. All right. And to add to that, as a developer, because you're talking about rate of return, at what point in time, what percentage of your budget should you allocate to seeing as a cushion to be, you know, when you don't have somebody renting your property, or when you need to do developing, improving the property? What are some things you need to think about in terms of budgeting for that as an investor?
Yeah. Abigail, I think that depends on the nature of the property. If it's a standalone house or if it's an apartment as part of a community. So I would have thought between 15 and 20% to be conservative, you know, and possibly some of that goes into some sort of sinking fund for the long-term maintenance items. For an apartment in an apartment building where a lot of the external works are being seen about, that figure could drop down to sort of 8 to 10%.
Okay, and Andrew, can you tell us a little bit about how we can use some more of the liquid investments to kind of create a cushion, the same cushion that these two gentlemen have been talking about?
Sure. Definitely, as Daniel alluded to, the cost of maintaining a property over the long term definitely creeps up on you. And I think the investor should be aware of that from the outset, and as such making preparations to use those funds, the funds coming in from the rental income, in a more efficient manner, such that they can offset any costs that come down the road in terms of the repairs and the modifications that may arise. One of the ways to do that is to invest in fixed assets that, in terms of a timeline, would match with the future need
Of the property.
of the property in terms of the maintenance and repairs. And I think that would be the best approach.
Okay. All right. Thank you, guys. Okay, so one of the other things we want to talk about from the development perspective is high net worth individuals investing in large properties. How has the contraction of the economy and the fact that things are slowing down affected people's ability to hold on to properties without rent, and how long do people need to budget for that a property may be waiting for somebody to rent your property?
Abigail, I think the sensible investors possibly need to look at lowering the rent. I know a lot of the high worth properties were attracting US rentals, and because of the sort of challenges the oil and gas sector are experiencing now with not as much expatriate staff in Trinidad, the demand for that level of accommodation is greatly reduced. So I think, you know, people need to look at their portfolio and look and see if they can afford to hold on for the long term. The correction may take a couple years. It's only going to correct itself when the oil and gas sector corrects itself.
Yes.
So it's a knock-on effect.
Okay. All right. So what about the cost of inputs, with the fact that, you know, the budget is, well, the recent budget is now in announcing higher costs for fuel and things like that. When you're developing a property, how do you need to value that, how to budget for that, and how to understand what are the long-term costs, and how long, let's say you're buying a property that may not come online for 5 or 10 years, or however long it takes to develop a property. How do you budget for that, and how do you take that into consideration, and how do you use your investments as well, Andrew? You can answer Tarek and then Andrew, to make sure your money is growing in the meanwhile.
Yeah. Well, there are two types of property investments. You can either buy immediately on the open market, or you can buy off plan. meaning it's not built yet. So there may be a series of stage payments that you may have to make, and you need to understand clearly the timing of those payments, and you need to make sure that you have the funds to supply that demand of the properties.
Okay. All right. And Andrew, so one of the things I wanted to ask you about real estate investment is how do you know how to measure the rental value of the property in compared to how much you're going to be having to invest in it in a long term terms, or comparing it to your mortgage? How do you know the correct balance as to the rental value of the property, especially when you have to take into consideration these hidden costs?
Okay, I think a lot of it relies on your capacity to pay the mortgage on a monthly basis. So you're speaking about just in terms of what the minimum deposit should be. I think that should be your guide, your ability to pay. The cost of a mortgage, you want to be in a position that each month you're able to meet your monthly expenses, both for the mortgage as well as for any other incidentals. So that will guide you in terms of what your minimum deposit should be, I believe.
Okay. And well, we were talking a lot about buying, but I'd like to get you guys' opinion as well on selling a property. So I'll start with Tarek in terms of when was a good time to sell as a developer. Well, when you're looking at a property that you've bought through a development, and what are some good indicators that this property is ready to be sold in terms of your return on investment?
Yeah. Well, I think it depends on what your plan was for that asset, because at the end of the day, the property is an asset. So property is a very long-term asset. Possibly in some degrees you can look at it as a medium term, but it depends what plan you had for it. So if it was to own this property for, say, 15 years to pay off for it, and then sell it as an asset and gain a cash injection, then you need to make sure that that's part of your plan. If it is that you wanted to purchase this asset so that it gives you a cash flow, then as long as the cash flow is positive, then I guess you can keep it. You know what I mean? And you could consider the entire investment strategy for that.
Yeah. And Daniel, I know sometimes people are very reluctant to sell a property that has a lot of sentimental value to them. But what are some indicators to you that you're ready to sell a property, and how do you go about valuing a property to make sure you're getting the best return on your investment?
Well, when is a good time to sell is right before the next crash. So that's when I would sell. But if I knew that, I wouldn't be sitting here. In terms of when is a good time to sell, again, as Tarek alluded to, it is really up to the particular goals of the investor, what he was trying to achieve in his investment. For me, if the property is continuously generating a positive cash flow, then I would say, hold, why sell? However, another reason you may want to sell is if you have another opportunity that maybe gives you a better return. So you may want to liquidate this asset so that you can put your money somewhere else that may provide a better opportunity.
Okay. All right. And Andrew, when you're selling a property and you may have to be illiquid for some time, how do you compare, or how do you use your portfolio to balance that time when you have this property on hold and you might not be able to use it? How do you use your portfolio basically in that sense?
In this, I believe if your portfolio is illiquid, I think at that time you would possibly look at ways to increase the liquidity on the portfolio to allow for any unforeseen events that may prevent you from liquidating the property in the timeline that you would have had in mind. There are a lot of upfront costs that will come into to liquidating a property, as Daniel alluded to earlier. And so you may want to take the precaution to start selling some of the investments that will allow you to cover some of those costs, and not force you in a position, especially on the real estate, where at times the sale process can be very lengthy based on the demand in the marketplace for the unit. You wouldn't want to be in a position whereby you're forced to sell and not maximize on your return.
So one thing that we're looking at when the economy in Trinidad is in a bit of a recession is that we need to look at the fundamentals of the real estate market and the housing markets. And Andrew, I want you to tell me a little bit about how you think properties are valued in Trinidad and Tobago, whether they're good fundamentals, or do you think that our properties are overvalued or undervalued? And I think as well, Daniel will be able to comment on that.
Well, initially I thought that the valuation in Trinidad, house prices in Trinidad were relatively high. Just based on my personal observation of the market, but we did some research recently, and in fact it shows that the Trinidad market in comparison to, say, the Jamaican market and the US market is relatively well valued. I mean, in the sense of, the research showed that for single family homes, the average price, median price is 1.3 million Trinidad TT dollars. In Jamaica, the same house is roughly 1.4 million TT dollars.
Okay.
And in the US, it's approximately 200,000 or 2.3 million TT dollars.
Okay.
So back to the original question, is there value in the market? Yes, there is, because despite the economy going through this phase, it is still one of the strongest within the region. There's still a high disposable income here. There is limited supply relative to demand. So, it just underscores that there is still value here, and in some cases it may be undervalued relative to other markets.
Okay. All right. You wanted to add to that? Dan?
No, well, I think anybody that lives in Trinidad, if you ask them if they think property prices are overvalued here, everybody would say yes.
Yes.
However, from a valuer's perspective, you can't say that it's overvalued because the value is what the market is willing to pay. So the fact that there are people in the market willing to pay these prices that you and me might think are overvalued means that that is the market and that is the value as of today. So, I mean, like it or not, the market value is high at this point in time, but that's just what the market is.
And Tarek, how would you answer that question, given that you said a lot of the opportunities in the low to middle income brackets? Do you think that those houses are currently overpriced? And do you think as developers there's going to be a push to make sure that they're more affordable? Or
Yeah, Abigail, I mean, there's a host of costs that goes into developing a property. You've got the land costs. Apart from that, you've got the evaluators, the land surveyors, the quantity surveyors. You have finance charges. You have approvals. It's a long process, and it needs a lot of cash injection throughout. So I personally don't think that the low to medium end properties are overvalued. As Danielle said, it is what the market bears. But what I can tell you is that the government are unable to supply the lower end of the market, the affordable homes, through their vehicle HDC. And that in itself drives up a huge demand for homes that cannot be satisfied by the government or local developers.
Yeah. So actually, to follow up, it's good that you mentioned the government, because recently in the 2017-2018 budget, there is a proposal to incentivize development with what you may call it, a grant, well, not a grant, a benefit of $100,000 for every property that's developed. Do you think, as investors, that they should now is a good time to look into developing projects because there will be a boom in that direction? What do you think?
Absolutely, Abigail. We welcome, as a developer, we welcome that stimulus that the government has offered. We think it's great for the industry. It's a good incentive. But I'd let you know there are other incentives that existed. Sort of, if you were able to develop properties for $1 million or $1.5 million per unit, that they would be tax exempt for profits. So the developers welcome those stimulations, and we have yet to see how it actually translates and who is administering it. We understand it's HDC, but we welcome it, and we think it could only be positive for the homeowners that will eventually purchase them.
All right, wonderful. All right, so I guess the question is, with the rise in housing prices, how would you say that families, because a lot of wealth is intergenerational, how would you say, as somebody who has inherited a house or who is looking at getting a property or has property in the family, how would you say, Andrew, you could use that kind of property as investment, and do you think that it is a good idea to try to, leverage the value of that house for other investments, seeing as how you don't have to pay a mortgage on it because it's already yours?
Well, Abigail, I think, yes, there are a number of ways to go about it. I think one of the ways would be to possibly, depending on the size of the house, the location, it's probably retrofitting the house into a multi-family unit,
Yeah.
whereby you'll be able to create increased number of units to generate additional cash flows. There are other ways to do it. You could definitely borrow against the house if you see, land available, borrow against the house to buy the land and invest. Probably get Tarek to do the development, and you'll make a lot of money.
Okay. All right. And one of the things I want to ask about property value is that you mentioned earlier that we're starting to see that move out of Port of Spain and environs. How do you think an investor should consider properties that are located in the south and the eastern part of Trinidad as a lucrative property? And what do you think the direction for the long-term real estate market in Trinidad? Do you see us moving outside of Port of Spain?
Abigail, absolutely. Okay. Port of Spain is not the only city in Trinidad. And the cities are where a lot of people work. People still commute, although Trinidad is fairly small. People still commute, and for work purposes, they still reside close to the cities. Another emerging market in the whole of the UK is student accommodation. If you look at the whole housing market in Manchester, Birmingham, Liverpool, Salford, there are huge high-rise buildings popping up all over the universities. We are involved in 2 buildings close to the University of the West Indies, but therein lies huge opportunities, not only for lecturers to rent, but also for higher-end student accommodation. There's UTT, there's other universities in Trinidad, so therein lies an opportunity for developers as well to provide student accommodation.
And Daniel, would you like to add to that, talking about property values outside of Port of Spain?
Yeah, well, I think we all see the rapid expansion of areas like Chaguanas and developments that are taking place in southern Trinidad now, and those provide opportunities for investors now, Port of Spain is sort of already developed, with still some development taking place, but when you look at areas that are growing and demand are increasing, you're looking like at the Chaguanas areas and even further east and south.
Okay. So, do you see that there are lucrative real estate opportunities for Trinidad and Tobago investors in other CARICOM countries, as well as outside of the CARICOM region, perhaps? I'll start with you, Andrew.
Yeah, I definitely believe so. Jamaica is one market that I think is growing at a good clip, given the improvements in its economy. The inflation is coming down. Unemployment is declining. So it's definitely a good that be one market to consider. As for the other markets, I believe, with there are some hotspots in up the islands. They could definitely represent some opportunities. And I think the challenge, though, for many investors who would want to explore those opportunities would be the availability of the US dollar. Unless you have the US dollar, you can't invest in those markets. Okay. So that would prove some constraint towards your ability to enter into those markets.
Okay. So one of the things I wanted to ask was whether you believe that there are other considerations that we have not as yet mentioned in terms of looking at real estate for investment. So we spoke a lot about the value of the property and the rent and other hidden costs, but is there anything else that you guys would want to highlight in terms of making an investment in real estate and what you need to consider? And I'll start with you, Tarek.
Actually, one thing we didn't look at, Daniel and Ruth spoke about making sure that you can meet your costs. But I want to throw out something here today. Even if you can't meet your costs, one should even consider real estate. And what I mean to say is, if the rent cannot pay the actual cost and you have to dip from your pocket to make the extra contribution, real estate is a long-term investment. investment. And at the end of the day, if you've taken a mortgage, every time you pay back your mortgage, you are adding to the principal sum, and the amount you contribute towards the interest from that loan is diminishing. So although, as I say, you need to take out from your savings to meet your monthly payments, I still think it is a great investment, because at the end of the maturity period of your mortgage, the property is yours. You may have bought it for 1.5 million, let's say, and in 15 years, Daniel, I wager a guess that it'll probably be worth $3 to $4 to $5 million. So although it was hard for you to make those payments every month, your rent was barely paying your cost and you had to dip in, I strongly suggest to people who can afford it, make the step. So the first step for the young are to get onto the property ladder, and once your head is above the parapet, I think you should consider investment portfolios in property.
Okay.
Property, you can't go wrong.
Okay. All right, Daniel, is there anything you wanted to discuss in terms of what are some other considerations when investing, especially as somebody who values properties?
Well, not an investment strategy I might take on board with dipping in your pocket from day one. I mean, I wouldn't go into an investment knowing that, but I do see the opportunity. There's definitely people have made a lot of money, even if you just hold it for a couple of years, while it might have cost you a small sum of money in the last 2 or 3 years, you then sell it for a big return. So there is an opportunity there. It's just not something that I might do. I wouldn't go into it at this point, seeing that they may have other opportunities out there to invest in properties that actually provide a positive cash flow from day one. Rare, but possible.
Okay. All right, and what about you, Andrew? What are some other considerations we have yet to discuss to take into consideration when you're using real estate as an investment, especially if you want to maximize on your returns?
I think there's a saying, location, location, location. That plays a great role in the appreciation and the value of the property. We've seen where, especially on the commercial side, where that makes a big difference. I mean, if we look at several business places on Arapita Avenue, for argument's sake, you can see where, just casually looking, observation, where the business, there's a difference in the flow of business. And I think, it is for the investor to realize that the market is cyclical. Okay. Most investors will not, Tarek will say, real estate is a good long-term investment. Yes, it is. But just like any other asset class, it goes through its cycles, and I think we're seeing one right now.
Yes.
So it's for the investor to be sensitive to that, such that they can anticipate the downturn and be prepared to offset. Daniel spoke about issues like vacancies. Based on my research, I'm understanding that there are increasing number of vacancies in terms of investment properties. That affects your return. So it's for investors to take the cyclicality in context, make preparations ahead of that time to probably purchase some other financial asset that in some ways mimics the cash flow generation ability of a real estate property, and use it as a stopgap measure until the market rebounds or until they can get a tenant or they can reduce the vacancy level.
Okay. All right, so taking a slight turn, I'd like to talk a little bit about some of the external factors that affect real estate development. So given the effects of global warming and the demise of the recent horrendous things that happened with the hurricanes for countries like Dominica and the Virgin Islands, would it be worth investing in developments with building designs that can withstand more severe weather patterns? And I'll start with you, Tariq, because you're looking at it from that stage.
Yeah. Abigail, what I can tell you is that when you develop a single-family home, you're not required to go through the robust approvals as you would if you had a multi-story apartment complex. Yeah. So what I can tell you is the multi-story apartment complexes, they need to be designed by a registered engineer, and it has to go to the Ministry of Works for approval, and these are well-engineered buildings that can withstand hurricanes and earthquakes.
Okay.
you know?
Okay, that's good to know.
Yeah.
One of the things I want to ask, we have a large diaspora outside of Trinidad and Tobago. We have a lot of returning nationals, but we also have people who are interested in just coming to Trinidad and Tobago for vacation. How do you think that someone should approach a vacation property as an investment, and what are some things to take into consideration in buying a property for the purpose of someone renting it on a short-term basis and instead of a long-term rental? I'll start with you, Daniel.
Vacation rentals, I'm not an expert at this, but I do know that late 2016, I heard some arguments from the hotel industry, particularly in Tobago, of a big drop in their clients, and as a result, people would now have to reduce rental rates. There are a lot of vacant homes in Tobago that are available for rent now, so it's not something at this time that I would that I would invest in, but who knows in the future, or maybe if you're looking to the long run, it may be something to pay attention to.
Okay. So Andrew, one of the things about investing in different classes of assets is you're going to have more than one type of asset. But do you think that even within the asset range of real estate, that there are different types of properties based on the risk? And I'd like you to tell me a little bit more about a low-risk property investment versus like a high-risk property investment.
Well, Abigail, I think that question, that's a tough one for me to answer.
Okay.
I'm not the expert in terms of real estate and what would be considered more risky than something. But I think, as we alluded to earlier, it's just based on where a low-risk environment would, from my perspective, would be something in the lower end of the market, more affordable. I think with the economy contracting and there's lack of confidence in terms of people having jobs and incomes, you would definitely want to be in that end of the market, the lower end of the market, because there's definitely a large demand, large number of individuals in that bracket who will be able to take up whatever supply comes onto the market. To go into the high end or the rental market that we were just discussing earlier, that may not be, that may have a higher level of risk, as Daniel alluded to earlier. There's a lot of uncertainty in the rental market, the vacation rental market. As I think in the case of Trinidad, it's not predominantly known as a vacation or location. So definitely you'd have more exposure to risk in that segment.
And Tarek, would you like to give us then a little bit more into looking at evaluating the risk of investing in a property, and what would be a lower risk versus a higher risk investment, especially from a developer standpoint?
Yeah. Well, I think the biggest risk is having your apartment or your home idle. So if you get a common home that attracts a decent rent, I think that is where you want to go, as opposed to a high-end market. So I think any property that can achieve a rent of, say, 3,000 upwards to 6,000, 7,000, I think that is probably where you want to target your investment.
Yes.
And obviously there are a lot of areas that can sustain that sort of rent. You've got St. Augustine, you've got Chaguanas, you have areas emerging around San Fernando, and those are the sort of, if I could use the word, hotspots that, from an investment standpoint, I want to make that clear, that you would probably want to target.
Okay. All right, and Daniel, so when you're valuing a property, what are some things you want to look out for that will let you know this is a good investment or something you should be more cautious about investing in? In terms of the actual property, yeah.
Well, again, it depends on what you're looking for. If you're looking for an investment or something or like a rental property, then you're looking for something that most people are looking for. You're looking for the 3-bedroom, 2-bathroom house, middle income. You want to set yourself or set your properties in that market just because there's much more demand there as opposed to the very high end, where yes, you might get a good tenant, but if you lose a tenant, there's a likelihood that your apartment or your house remains vacant for a while. So you're looking at the middle income, and you're looking at the things that most people are looking for, like the 3-bedroom, 2-bathroom, or the little 2-bedroom apartment.
Okay. All right. So I think before I close things off, I'd like to ask all of you guys, what would be your final advice you'd like to offer to anybody who's looking to invest and wanting to invest in a property so that they can add value or to be able to add to their portfolio? And I'll start with you, Tariq.
2 words, buy now.
Okay. Yeah. Okay,
Yeah,
so buy
definitely
right
buy
now.
now.
Now is the time
Yeah.
to buy.
There are opportunities out there. You just need to go, look, seek, make sure you're comfortable with it, and go forward.
Okay, all right, and Daniel?
Yeah, well, there's a saying that goes, you know, don't wait to buy real estate. Buy real estate and wait.
Okay.
And I would follow that advice even in today's market.
All right, and for you, Andrew?
I think for the first-time home buyer, I think it's for them to begin developing an investment portfolio that can give them a higher return than what they're normally accustomed to, something that can help them achieve their dream objective in a shorter space of time.
Okay. All right. Another question we actually just got is, how does the interest rates play into the decision when you're investing in a property? Like, do you want to go for, how do you evaluate the interest rate? Do you tie that into the rental value of the property?
Absolutely. If you run a spreadsheet on interest rates, and the banks are offering loans of between 5 and upwards of 7, and if you run a spreadsheet, you will see how much more it increases your payments a month. So what I would tell investors is negotiate and negotiate and negotiate.
Okay.
You know, bring those interest rates down. There are a lot of lending institutions out there now, not only banks, there are also other financial institutions that are offering mortgages. Shop around, get your best deal, because at the end of the day, this is perceived to be a business.
Okay. All right, thank you. So, on behalf of the Trinidad and Tobago Chamber of Commerce, I'd like to thank all 3 of you today for coming and talking to us, and hopefully giving our audience a good appreciation of what are the risks, what are the opportunities in the real estate investment market. And I'd like to invite you all to view this webinar again if you have a chance, and also to check out the future installments we'll have in our Business Insights series. So thank you.
Thank you, Abigail.
Thank you.
Thank you.